Hello, everyone, and welcome back to Toast and Topics. We have been on a bit of a hiatus these past several weeks because Sachin was traveling back home to India. While it was hard to record an episode given the time difference, Toast and Topics was still very much on our minds. Throughout the trip, Sachin has been collecting observations on India's economic development and some of the changes that the country has implemented on a large scale that we plan to discuss more today, specifically on India's system of digital payments. But before we get into all of that, Sachin, welcome back. And how was the trip?
Thanks, Ben. It's good to be back. I had a great time in India and I'm well rested now. I'm tanned and I'm ready for some toast and topics again.
Okay, that's pretty great. So, first of all, where in India were you traveling?
So, as you know, I still have family back in India, and like my prior trips, we spent time with them. But this time, we actually planned a road trip through the state of Rajasthan, which is in northern India. And we traveled to three cities there: Jaipur, Jodhpur, and Udaipur. Rajasthan is known for its rich culture and history, and it's famous for its forts and palaces that were used to housed some of India's kings as early as the 1400s. And it was really just an incredible part of the country, and it was so unique and really impressive to see the sheer size of some of these palaces.
That sounds awesome. I got to make it out there at some point. So, what were some of your favorite parts of the trip? Just give me a few highlights here.
Yeah, all three cities that we visited were unique in their own way. But if there's two things that I'd highlight, first would be getting to experience Rajasthani food. As you know, I have quite the voracious appetite for food, and I got to experience some great local cuisine while in Rajasthan, which actually differs from other parts of India because they use a different combination of vegetables and core ingredients in most of their dishes.
Hmm.
Rajasthan is a desert, so their access to vegetables differ with the rest of the country. And there's just a more limited number of things that can grow well there. So that was quite interesting. I also rode a camel in Jodhpur. We were visiting one of the large forts there, and there was an opportunity to go on a short camel ride. And so I jumped on that opportunity, and I must say that camels are not nearly as smooth as horses, and it was really quite the core workout trying to hang on to that thing.
Yeah, I get that. I've ridden some camels before, and dismounting from them is always kind of a terrifying process. So, is there anything that you noticed about India that was different about the country relative to the last time that you were there?
India has developed a lot in the past decade. I visited last year as well, and I was really impressed with how modern its major cities have become. The government has invested tremendously in growing the country's infrastructure. For example, the airport in Mumbai feels brand new, and it sure beats New York's JFK in the overall end-to-end experience. There's
Hmm.
also long stretches of major highways that now connect India's biggest cities, and that improves efficiency of travel and connectivity for its people. I think that one of the most unique things about the country is the way that people do business there. Almost no one carries cash on them anymore, and all of the transactions are now fully digitized. And you'll find everyone ranging from grocery store desks to restaurants and even fruit vendors on the side of the road have a QR code that people scan to transfer money. And I've never quite seen anything like it.
Yeah, that's neat. So I'll stop you there, Sachin. India's Unified Payments Interface, or UPI for short, which I think is what you're describing, has really been a marvel in India in terms of how quickly it was adopted. And I think that that's where we are going to focus the rest of this conversation. So, first, could you describe what UPI is?
Sure. So, as you said, Ben, UPI stands for Unified Payments Interface, and it's essentially a mobile-based real-time payment system that can allow users to instantly transfer funds between bank accounts using their mobile phones. Every merchant and individual within the system has a unique UPI ID, which means that they can reliably receive the funds that are intended for them. And this digital interface enables real-time transfers 24 by 7. The system was launched in roughly 2016 by the National Payments Corporation of India, and it's regulated by the Reserve Bank of India. And just to put the scale of this into perspective, there are about 350 million active UPI users in India and over 340 million unique QR codes being used at various merchants.
Wow, that's fascinating. The scale of that's really pretty impressive. Just for context here, the population of the United States is around 350 million, so that's quite a lot of buy-in. If I'm understanding correctly, the UPI system in essence operates as a digital public infrastructure, and it's a substitute for holding physical cash. So, how does that actually work in practice?
Yeah, so as I mentioned earlier, every shop and merchant will have a UPI ID, which is a unique QR code, and all of these are linked to each person's bank account. If you want to buy a sandwich, for example, all you have to do is take your phone out and scan that QR code, which will then link to your own UPI ID. And within the app that you're using, you'll just have to verify the details of what you're transferring and approve the transaction, and the money gets transferred instantly.
Okay, I see. This all reminds me a lot of Venmo and Zelle in the United States, actually. Am I correct in saying that?
I think that conceptually it's correct. It's actually quite similar to Venmo and Zelle, but I think the key difference is that the UPI infrastructure is far more expansive and widely accepted as a payment method. There are over 77 mobile applications that you can use in India to facilitate payments. That includes Google Pay, WhatsApp, Phone Pay, and Paytm, for example. There is also more than 550 banks that are integrated into the UPI framework, which means that there's just extensive reach and utility. In the US, I can't just go into a coffee shop and ask if they accept Venmo, for example. The answer most likely is no. Um, and it's a similar story with Zelle. They facilitate bank-to-bank transfers, but it's not as widely accepted by as many financial institutions.
That makes sense to me. And actually, digital payments have long been a source of progress in emerging markets, even beyond India. For example, I know that in 2007, I think, M-Pesa, which is a mobile money service, was launched in Kenya by the telecoms giant Safaricom. And their payments are sent by SMS to friends, family, or retailers. And apparently, M-Pesa is now used by over 90% of Kenyan households, which is just a crazy level of adoption. And it makes it easier than ever to send money to relatives over distances. And that's a big deal for a place like Kenya where you can have people often working pretty far from home and supporting family through remittances. China is another example here, with Ant Group and WeChat Pay controlling more than 90% of digital payments in the country. And Brazil has also apparently been inspired by India's model, and it has an app called Pix that facilitates bank-to-bank payments for a small fee. And that now controls 30% of Brazil's electronic payments, and that's in comparison to 20% for credit cards. India really has been a standout here, however. Overall, UPI has processed over $1 trillion of transactions. That's just in 2022 alone. And that's roughly equivalent to a third of India's nominal GDP. And UPI leads the world in real-time digital payments by clocking almost 40% of all such transactions globally, which is also a testament to just how populous India is. And so what I do wonder here is why the India model specifically has been so successful and what's in it for these apps that are adopting this UPI system in India? How are they making money off of this, if at all?
I think that the key driver of success in India has been that their central bank has heavily promoted UPI and has even required retailers above a certain size to accept it as a method of payment. UPI also has zero fees, and the government heavily subsidizes participating business entities. For example, the government compensated banks and fintechs within India with over 2,000 crore rupees, which is about $250 million in 2022, as a subsidy for their public service in sustaining UPI infrastructure. Typically, these apps would make money on transaction fees, which is similar to how credit cards make money. But what I find most interesting is the point that there are zero fees on UPI transactions in India. For many Indian fintechs, UPI is not really where they make money. Instead, it's really a useful customer acquisition channel for banks and fintechs that could benefit from its massive amounts of transaction data. And essentially, it's bringing a customer onto their platform where they can eventually offer more services down the road, such as making a loan, which is ultimately more profitable for the institution. On your second question, the acceleration of UPI in India, I think, was bolstered by a few things. The first was the government's demonetization campaign in 2016, where multiple high denomination banknotes were discontinued and no longer accepted. This was essentially an attempt by the Indian government to reduce black money in the economy, and it's really when the UPI interface took off as an alternative. And the key benefit for the government here is that all transactions are now officially recorded on some platform, and hence they're able to more accurately charge and collect taxes on these transactions. The second is COVID, which actually left many consumers scared of holding cash due to the physical nature of transactions. And this was something that even happened in the US. During the COVID years, UPI had grown from about 17% of 31 billion digital transactions in 2019 to 52% of 88.4 billion in digital transactions by 2022. So there was immense growth during those couple of years.
Yeah, that's a really impressive level of growth for sure. So I'd like to move on now to what the economic implications of all of this are going to be for India and other developing nations that are adopting similar sorts of payment systems. Could you tell me some of your thoughts on that, just based off of what you were seeing when you were in India and any of the reading that you've done?
Sure. So the benefits of digital finance infrastructure tend to be larger in emerging economies than in the rich world. And that's largely because people in rich countries already have access to more modern financial services through well-kept record systems. Additionally, with higher GDP per capita, developed economies also have more assets that can be collateralized among individuals. And so those individuals have greater access to credit because financial institutions are more willing to make loans to them. In other words, developed economies can often process payments based on platforms such as credit cards, which is not always an option for poor individuals in developing economies with fewer assets and little to no credit history. There's a few clear positive outcomes from digital payments infrastructure for India and for most developing economies. First is that it makes it much easier to move around money with less friction. In economics, there's a concept called the velocity of money, or in other words, how quickly money changes hands. And the higher that velocity is, you can think of the economy as being more frictionless. Digital payments really avoid the need for individuals to wait in long lines to draw cash at a bank, and it just makes it easier for people to spend and for others to receive money. And this means greater movement of money across the economy in aggregate. In fact, consumer spending does tend to go up when money can be moved with less friction. In the case of Kenya, for example, estimates from many research studies suggest that M-Pesa has reduced extreme poverty in Kenya by at least 2%. The second is that digital payments provide a chance to supercharge development through better access to data. Digital payments generate real-time data on sellers' businesses and buyers' purchasing habits, and That allows lenders to reach customers who may have neither the financial history nor enough assets to participate in traditional finance. And so ultimately, that improves access to capital. Fintech lending in India reached $270 billion in 2022, and that's up from just $9 billion a decade earlier. And that's reaching a broader range of people. And then finally, this UPI infrastructure promotes greater competition among fintechs and banks. Uh, Consumers ultimately want to use the most widely accepted payment systems, and retailers similarly need access to the most widely used systems to facilitate more transactions. UPI does not have dominant players like in the credit card world in the US. And the architects of the UPI framework see this model as a way to break that trend of high concentration. And it's seen as more of a public utility that anyone can access. That forces both banks and fintech platforms alike to expand their offerings to align with consumer needs, and that's constantly evolving over time.
Hmm. That's a fairly rosy portrait that you've painted there, Sachin. In preparing for this conversation, though, I did come across some perhaps negative side effects of India's rapid adoption of a UPI-based system. So, as you've already established, the banks and fintechs that are providing this UPI system aren't charging transaction fees on it. They're not making money from the platform, and the only way that they've really been able to finance it has been through a steady stream of subsidies. As you noted, India's government compensated banks and some fintechs with just over 250 million for providing this service in 2022, which actually isn't a huge amount of money in the grand scheme of things, just considering how large this industry is and the sheer quantity of payments that are being processed. And so the lack of financial incentives and perhaps adequate financial support for UPI providers has meant that it does suffer from underinvestment in some areas. For example, there have been complaints that UPI compatible platforms are not investing sufficiently in consumer protection. And I think that's something that you can see in the level of complaints that are being levied against these UPI services. Survey by Renuka Sane, an Indian economist, and her co-authors found that 18% of UPI users had some kind of grievance with the system, for example, fraud or mistaken payment. And less than 30% of that 18% of individuals had their pay or had their complaints resolved. And that can lead to a lack of trust. And that's meant that UPI is generally not used for larger purchases. Consumers prefer safer, more established payment methods for big ticket UPI items. For example, a common sort of refrain would be, I use UPI to buy chai tea, but I wouldn't use it for a plane ticket. Regardless, though, it does seem that UPI is an excellent and really innovative system that's able to fill an important niche in India's economy. And that, of course, raises the question of where else systems like it have been utilized, especially in developed markets with more mature financial payment systems. And really, what I'm getting at here is whether or not UPI or something like it could be adopted in a place like the United States.
Yeah, it's a really interesting thing to think about, man. And I think one of the most interesting examples of a country that's not yet adopted UPI is the United States. Um, the US launched its own instant payment systems known as FedNow in July of 2023, but the system has really not yet gained widespread adoption. The exact volume isn't publicized by the Fed, which operates the system, but it's pretty clear that not many people have utilized it yet. I've not even come across it. Um, this has been attributed to a few reasons. For example, FedNow requires that users enter one another's bank account numbers when facilitating a transaction, which is quite cumbersome, whereas UPI only requires that participants exchange phone numbers, which is just much easier. But I think the key reason that a system like UPI hasn't yet been adopted in the US really is more straightforward. We developed our own fast and reasonably effective payment system decades ago that has a lot of path dependency. And what I mean by that is most Americans already have credit cards or debit cards that allow them to process transactions nearly instantaneously from their perspective. Banks like this arrangement because they can charge hefty fees for transactions, and consumers don't really want to deal with the inconvenience of switching from a payment method that they perceive as workable to something else. Similarly, banks don't want to lose out on profits.
That's an interesting point, Sachin. And so, in essence, to put it bluntly, because India remained a financial backwater for so long, they've actually been able to leapfrog the United States and more developed countries because their citizens have been willing to adopt a new and innovative system, really because there was no alternative system in place. And that's actually something that you see a lot in economic development. For example, it's something that I've pointed out with respect to infrastructure and transit systems in the United States. Sure, China and other countries have much newer and nicer infrastructure, but the reason I think that there hasn't been urgent push in the United States to build that kind of new infrastructure ourselves is that we already have older infrastructure that, while not nearly as nice, gets the job done. And so, regardless of that, I think it's now worth turning quickly to what the future of UPI could be in India. So, as we've already kind of established, no instant payment system is perfect, but UPI is a very clear improvement on cash. And for developing countries, UPI offers a really useful customer acquisition channel for banks and fintechs that could benefit from massive amounts of transaction data, which could help them tailor their services to better fit the needs of people because they're bringing so many new individuals who really didn't have a financial profile before into the financial system with these more informal sorts of transactions. And so, leveraging those strengths, I think UPI conceivably could become a payment option in places even beyond India, just as Alipay is widely used and accepted outside of China. And that would surely create some new competition for bank and credit card behemoths in the West. But really, thus far, UPI has only been adopted in a limited subset of countries. And so, for UPI to gain more adoption, I think it's going to require some more buy-in from established financial actors and also some streamlined regulations to protect consumers. Thankfully, UPI already does have some consumer protections. For example, it has strict controls related to how the personal data of its users is stored, but more such regulations and reforms, I think, could be utilized. And really, I think one area in particular that needs to be addressed with UPI is expeditiously confronting transaction fraud. As noted, many of the Indians who have suffered from fraud using UPI have not had those complaints resolved. And if that is something that can be improved, I think that trust in the system will increase and help to facilitate this system's adoption, both in India and perhaps outside of it.
Well said, Ben. I agree there. And yeah, all that said, it really does seem that UPI has been a really big positive in that it's brought more people into the financial system who may have been excluded before. Fine tuning is obviously needed, but it's an exciting development, and I'd be really interested to see what the future of this kind of an instant payment system looks like in India, but also abroad in the years ahead.
Yeah, agreed on that front. So we're looking forward now to you all joining us next week, where we'll be interviewing our friend Sachin Shiva, not to be confused with Sachin Ganesh, my co-host. And Sachin Shiva is a research associate at the Center for American Progress, which is a DC-based think tank, and he'll be telling us about some of the fascinating research that he has been doing on union policy in the United States. So until then. Thanks for listening to this episode of Toast and Topics. Before signing off, we wanted to disclose that the views expressed in this podcast are not representative of the organizations that we are associated with. If you learned something in this episode, please share it with a friend or leave us a review. Until next time.